It is Thursday. World Economic News. United States of America understanding the US economy. Domestic credit market flows in billions of dollars. And this is how it's flowed in billions of dollars. Back in 1991, this is in blue, the private people, the people and business, and in red, it's the private money, but it's the government that's spending it. So it's government in red and the private economy in blue. In 1991, $500 billion borrowed and spent by them both. Up to 2001, and it was $1 trillion borrowed and spent by them both. And as you can see, in the 2001, the red component of that is just a blip. It's the match, the igniting part of the match on top of the main part, which is the blue borrowed by the private sector. And as the boom went into the noughties, you can see that the blue just ramped up and up and up and up, with the igniting match part getting slightly bigger, but the main borrowing was done and spending was done by the private sector. Crash. Blue goes down, down, negative, negative, and you can see it's just pulling up from its vast amount of negativeness. And the three big red lines up, which is government spending, government spending, government spending. And this is just a lovely chart to show and re-ask the question, what would things be like if the government hadn't done that government spending, government spending, government spending? And to get a better angle on what's been happening recently, we go to the next chart. And these are the private aspect of it. Business, non-corporate in purpley colour. Green is business corporate. Red is household consumer, and blue is mortgages. And as you can see, in 2007, quarter two, everything was at its peak at about $2 trillion. Borrowing, spending, spending, borrowing. And they were all out there in the positive. And they, since the crash, they've swung all negative in 2009. And you can see that they're clawing their way back up positive again, with business and corporate pushing up towards $500 billion. But you've got to take the negative off that, which is the blue, which is mortgages. And you can just see the red there, household consumer. That's really, as we've said before, is college. That's your borrowing to go to school, which is pathetic. But there it is. But you've got to take the below the line off the top, above the line, and you're well short of $500 billion, coming down from $2 trillion, and it is the government that's spending the rest. Like it or lump it, or appreciate it or not. Bloomberg: import prices in the US increased more than estimated 1.4% on oil food costs. The cost of goods imported into the US rose more than forecast in February, led by further gains in commodities that companies are struggling to pass on to their consumers. Now this is it. Either you get the rise up in prices because inputs are going up, or the companies will make less money. Margin compression. Moving on to US corporate margins, 1980 to 2010. They've got a wanky way of working it out, but presumably they've used the same metric across since 1980, so we can go with it. And 8.4 30-year average for margins, and you can see there's a spike up before the crash, obviously a big spike down during the crash, but for some reason margins are really getting themselves well high again. Well, it's not for some reason, it's because they've been laying people off. The wage component being always a large component, lay more people off and you can make more on your margins. Can it last? That's the question. It'll either be maintaining the people unemployed, laying more people off, or the margins will come under pressure. Doodaloo-doo. New York Times: Gretchen Morgenson: a swift deal may not be a sound one. This is a horrible word. It's this Mortgagegate thing. And the attorneys general are kind of having a big overall powwow about it. Now, this is going to run on too long if I read this. I'll read and see how we go. One crucial reason the nation's mortgage industry ran itself and the entire nation off the rails was its obsession with speed. Mortgages had to be approved chop chop. Loans pooled instantly. When it came to foreclosures, well, the quicker the better, etc. And she's saying this overarching attorneys general meeting they're trying to do it chop chop too. And are they being steamrolled, rushed into making bank friendly decisions? I won't read that next bit because I've just about covered what it's up to. But it's such a crucial thing that's happened in the United States, this mortgage thing, that it's not the sort of thing that should be rushed. It's a slow, analytical, critical eye should be really microscope the whole thing. And it looks like the banks might be trying to push it quickly and get away with murder. Most foul. Meanwhile in Bahrain, should I read some of this? Yes. While the world watches the fine results of building nuclear reactors, it's about Bahrain, Saudi Arabia and Yemen, and saying that they've been wanting democracy for a while, and the Sunni and Shia divides in those three countries. But the bottom line is, certainly for Saudi Arabia and Bahrain, that they've got absolute monarchies, which is anachronistic in this day and age. And when he's saying here that they're pro-democracy, that doesn't really come into it. It really doesn't. It's almost, you can think that this part of the world doesn't understand what democracy is. They use the word, but they don't really know what it is. If the Shias aren't getting enough influence in a Shiite world, or the Shiites in a Shia world, they call that wanting democracy. But if you gave them democracy, or if democracy was put in place, it wouldn't work out as democracy would in the West. It just wouldn't. And it's just so confusing. Even to choose Bahrain, you can work out because it's so small. But Saudi Arabia is big and complicated. Yemen isn't. It's big but it's also very, very, very complicated. It goes back to religious divides and even tribal divides, and it's all the boundaries have been Western world created for no apparent reason, and there's so much that it's incredibly difficult in the Middle East to come up with any sort of sweeping, overarching analysis that covers even a small area of it. It changes over every sand dune. Have to move forward. Rare political protests held in Syria. If you pause and read this, but Bashar I'll go to the bottom. The president also heads the Ba'ath Party, in power since 1963, which bans opposition, imposes emergency law, which is still in force, and it's just about forever been in force since 1963. And you ban opposition. Syria's really held tight. They had a little protest, and had a little protest, and then ran up the side streets because they're hard. They're hard. Vanity Fair, A.A. Gill, nice article on Dubai. A.A. Gill discovers that no one truly belongs in Dubai, where the legacy of oil has made everything worthless. Dubai would have been wonderful if the world went on being wonderful. And I don't think it'll work just as a playground for the rich, so it won't work. This is China. This is a chart on China that I've moved on to, and in short, what's happened here is when the crash crashed in China, the central government said to the local authorities and banks, lend more money so people can buy more land. It was communist, so the local authorities are selling the people's land to the people, and the people's banks are lending people's money to the people so they can buy the people's land, and it's worked that one out. I mean, how can you? I mean, it's ridiculous. But now the central government has told the local authorities to shut that one down, but that was making an awful lot of money for the local authorities. The standard stuff, but a very difficult crunch down will be 2011 and 12 from that chart. That red line will be going down. Less money for the local authorities to placate the local populations. Stratfor, very nice article by George Friedman. I just recommend following the link, and it's Japan, the Persian Gulf and energy, and it's an in-depth article and it's very well done. Gillian Tett, the most wonderful Gillian Tett, gives us Japan's supply chain risks reverberates globally, and it covers a bit of the stuff that's in the Stratfor article, but that's more on energy, where this is just the blurb for it. With many Japanese factories facing temporary or partial closures, the earthquake has left investors facing an uncomfortable truth, writes the most wonderful FT commonalist Gillian Tett. In the modern world, it can be tough to assess how convoluted cross-border linkages really work, in manufacturing as in finance. Many of the vulnerabilities in these chains remain unaddressed and are poorly understood. Of course they're poorly understood. This is capitalism. This is the invisible hand that's working to keep these chains linked. And each chain is obviously as strong as its weakest link. And there's energy and economics and now Mother Nature that's coming in and putting a lot of these links under pressure. And governments will struggle to find where the weak links are because they're just hidden. And there's no reason the government will have the brains or the wherewithal to find the weak links, to strengthen them, or even to be able to link them back up again when they do break, because they are increasingly coming under a lot of do-do-do-do. Bye.